Every weekend, billions of people across the globe stop what they're doing for one thing: football. Today, football is far more than a sport. It's one of the largest entertainment businesses in the world. Every year, billions of dollars flow through football clubs from broadcasting, sponsorships, ticket sales, and merchandise. But behind every packed stadium and championship celebration lies a financial reality that most fans never see. Here's the surprising part. Many of the world's biggest football clubs generate massive revenues but still lose money.
Why? Because earning more money often means spending even more money just to stay competitive.
For most clubs, player salaries are the single biggest expense, often consuming more than half of total revenue. And salaries are only the beginning. Every club must also pay for transfers, facilities, travel, scouting, and daily operations.
So if owning a football club is this expensive, why do billionaires keep buying them? The answer has very little to do with football itself.
Millions of supporters don't simply watch their club. They build lifelong emotional connections that often last for generations. That loyalty creates something every business wants: a customer who keeps coming back year after year. Even during losing seasons, many supporters continue buying shirts, renewing memberships, and filling stadium seats. For investors, that loyalty isn't just emotional. It's one of the most valuable financial assets a football club can own.
When someone buys a football club, they're not just buying 11 players. They're acquiring an entire business ecosystem.
And this raises the biggest question of all. If running a football club is so expensive, where does the money actually come from? That's exactly what we'll uncover next. The first and largest source of income for many football clubs isn't ticket sales. It's broadcasting rights. Every time a match is shown on television or streamed online, enormous broadcasting contracts help fund the clubs behind the action. That's why winning promotion into a top league can instantly transform a club's finances. For some clubs, television money is so important that losing league status can trigger a financial crisis. But television isn't the only source of income. Football clubs have built entire commercial empires far beyond the stadium. The second major source of income is commercial sponsorships. Companies pay millions just to have their brand associated with successful football clubs.
The bigger the club's global audience, the more valuable its sponsorship deals become.
That's why clubs invest heavily in social media, international tours, and worldwide marketing campaigns. Next comes Matchday revenue. Every sold-out stadium generates income long before the match even begins.
One football match doesn't just sell tickets. It creates hundreds of different opportunities to make money. Another powerful revenue stream is merchandise. Every jersey, scarf, cap, and souvenir sold adds to the club's income.
For the biggest clubs, merchandise isn't sold in just one country. It's sold across the entire world. The stronger the club's brand, the easier it becomes to sell products, even thousands of miles away from its home stadium. Some clubs also generate millions by developing young players and selling them to other teams. For these clubs, talented young players become valuable long-term investments rather than short-term expenses.
When you combine broadcasting, sponsorships, matchday income, merchandise, and player transfers, you begin to see how the football business really works.
But generating revenue is only half the story. The real challenge is controlling the enormous costs of running a football club. In the next chapter, we'll uncover where clubs spend the most money and why even billion-dollar teams can struggle to stay profitable. For most football clubs, one expense towers above everything else: player salaries. At many elite clubs, wages consume more than half of the club's total annual revenue. The better the players, the higher the salaries. Success in football comes with an incredibly expensive payroll.
And salaries don't stop when the season ends. Clubs must continue paying players throughout the entire year. When a star player like Kenji moves clubs, the finances are staggering. Club B just triggered his release clause, resulting in this massive...
A transfer fee is the amount one club pays another to acquire a player's contract before it expires.
For superstar players, those transfer fees can reach hundreds of millions of dollars, making them some of the most expensive assets in sports. And the transfer fee isn't the only cost. Clubs also pay signing bonuses, agent commissions, and performance incentives. By the time one transfer is complete, the true cost can be far higher than the headline price reported in the media. And once the player signs, the club's financial commitment is only just beginning. Behind every successful team is an entire workforce that fans rarely notice. Managers, coaches, analysts, doctors, scouts, and medical staff all receive salaries that add millions to the annual budget.
Then there are training facilities, youth academies, and sports science departments that require constant investment.
Modern football clubs also rely on advanced technology to improve performance both on and off the pitch.
Every improvement in performance usually comes with another investment, making success more expensive every single year.
Then comes one of the biggest hidden expenses: owning and maintaining a football stadium. Even when there isn't a single match being played, the stadium still costs money every day. Large stadiums require thousands of staff members to operate safely on match days. Security, crowd control, emergency services, and event management all become part of the operating budget. For many clubs, simply opening the stadium for one match can cost hundreds of thousands of dollars. Travel is another major expense. Every away match requires careful planning and significant spending. Flights, hotels, meals, equipment transport, and logistics quickly add up over an entire season. International competitions make these costs even higher, with longer trips and more complex operations. Medical care is another essential investment. Protecting players means protecting the club's most valuable assets. From injury prevention to rehabilitation, clubs invest millions every year to keep players performing at their best. Insurance is another hidden cost that most fans never think about, but every professional club depends on it. Clubs insure valuable players, stadiums, training facilities, and major events against unexpected losses. Another major expense comes from debt. Many clubs borrow money to finance stadiums, transfers, and long-term projects. Borrowing money can accelerate growth, but it also increases financial risk if results on the pitch don't follow.
This is why football isn't just a game of goals and trophies. It's also a game of financial decisions.
But controlling expenses is only one challenge. Football clubs must also follow strict financial rules to survive.
One of the most important regulations in modern football is financial fair play. The goal of these rules is simple: prevent clubs from spending far more money than they can generate. Without financial control, wealthy owners could simply spend unlimited money to dominate competition. But these rules created a new debate. Do they protect football, or do they protect the biggest clubs already at the top? The biggest clubs have one major advantage: success creates more money, and more money creates more success.
This creates a financial gap where the richest clubs can continue pulling further away from smaller teams.
A club's financial power is no longer measured only by trophies, but by its ability to create global commercial value. This is why ownership decisions are often about business strategy, not just passion for the game. But behind every successful ownership story, there are risks that can destroy millions of dollars overnight. One bad season can change everything. Missing important competitions can suddenly remove millions in expected income.
A club that spends heavily on players can quickly find itself trapped by expensive contracts.
The hardest challenge for owners is finding the balance between winning today and protecting the future.
This is why football club ownership requires a completely different mindset from normal business investing. Because football clubs don't only sell products, they sell identity, loyalty, memories, and belonging. This emotional connection is what makes football clubs unique compared to almost any other business. A loyal fan base creates predictable income through tickets, merchandise, memberships, and digital subscriptions. The strongest clubs can monetize supporters across continents, turning local teams into global brands. Social media and digital platforms have made it possible for clubs to reach millions without opening a new stadium. But building a global brand takes decades of history, success, and consistent storytelling. A football club's brand value can become one of its most powerful financial assets. This is why major companies pay millions to associate their names with famous football clubs.
A sponsorship deal is not just about putting a logo on a shirt. It is about accessing millions of loyal customers. The bigger the audience, the more valuable the sponsorship becomes.
This creates a powerful cycle where popularity attracts money, and money helps create even more popularity.
But money alone cannot guarantee success. Football remains unpredictable, and even expensive teams can fail.
A wrong transfer decision or poor management can destroy years of financial planning.
This is why successful owners focus on building strong systems, not just buying expensive players. The best-run clubs combine sporting ambition with careful financial management.
And this balance between winning and sustainability has become the biggest challenge in modern football ownership.
At this point, football clubs are no longer just sports teams. They have become global entertainment companies. Their business model combines sports, media, technology, advertising, and global fan communities. This transformation explains why investors, billionaires, and companies continue searching for football clubs to buy. For some owners, the goal is profit. For others, it is influence, reputation, or global recognition. But buying a football club is only the beginning. The real challenge is turning ownership into long-term success.
The biggest question for any owner is simple. Can a football club become a profitable investment?
Unlike traditional companies, football clubs often reinvest most of their income back into improving the team. Expansions. As you can see, the strategic improvements to the stadium and robust sponsorship deals have dramatically increased the club's.
The biggest financial returns often come when owners sell the club years later at a much higher valuation.
This is why football clubs are viewed not only as teams, but as valuable global assets. However, measuring a football club's true value is far more complicated than simply counting trophies. Investors analyze revenue growth, fan base size, stadium ownership, and future earning potential. A club with millions of passionate fans can be worth more because those supporters create long-term economic power. Stadium ownership can also dramatically increase a club's value because real estate creates additional financial opportunities.
This explains why two clubs with similar sporting success can have completely different financial value.
The location of a football club can also determine its financial power. Clubs in major cities often have access to larger markets, more sponsors, and bigger audiences. Global exposure can turn a local football club into a worldwide business empire. Technology has accelerated this growth by allowing clubs to connect directly with millions of supporters.
The future of football ownership will depend on who can combine tradition with modern business innovation.
As football becomes more global, ownership itself is changing faster than ever before.
Traditional local owners are now competing with international investors searching for sports assets.
Some investors see clubs as entertainment businesses. Others see them as long-term strategic assets. However, outside investment also creates debates about control, identity, and the future direction of club. The biggest challenge is finding a balance between financial growth and protecting what makes a club special. The most successful football owners understand one important lesson. A club is built for decades, not just seasons. Short-term spending can create excitement, but sustainable systems create lasting success. Youth development has become one of the smartest financial strategies for modern clubs. A player developed internally can become both a sporting asset and a valuable financial asset.
This is how smart clubs reduce costs while creating the next generation of stars. Beyond players, modern clubs are investing heavily in data, analytics, and technology.
Data helps clubs discover talent, prevent injuries, and make smarter financial decisions. Technology has changed football ownership from emotional guessing into calculated business strategy. But even the best technology cannot remove the uncertainty that makes football unique. This combination of business, technology, emotion, and uncertainty is what makes football ownership unlike any other investment.
As football continues to grow, new revenue opportunities are changing how clubs make money. Digital platforms allow clubs to earn money from fans who may never visit the stadium. Virtual content, online communities, and digital experiences may become major parts of football's future economy.
The clubs that adapt fastest to technology may become the financial leaders of tomorrow. But with greater commercialization comes a new question. Is football becoming too much like a business? A symbol of community, identity, and generations of passion. This is why our club is more than a company.
This emotional attachment creates a challenge when investors make decisions based only on financial returns. Some clubs have responded by giving supporters a stronger voice through fan ownership models. Fan ownership focuses on protecting tradition while still creating financial stability. The future of football ownership may depend on finding the perfect balance between money and meaning. The financial future of football clubs will depend on how they manage growth, technology, and global competition. Clubs that understand these changing behaviors will have stronger opportunities to create future revenue.
The clubs of tomorrow may earn as much from digital experiences as they do from traditional matches. But one thing will never change. Football clubs survive because people care deeply about them. Behind every successful football club is a complex financial machine working every single day. Millions of dollars move through clubs every season, but every dollar has a purpose. Understanding this money flow reveals why running a football club is one of the most complicated businesses in the world. Every decision, from signing a player to building a stadium, affects the club's future finances. This is why successful ownership requires financial knowledge, strategic thinking, and a long-term vision. At the highest level, football ownership is a combination of passion, investment, and strategic management.
The owners who understand this balance have the best chance of creating lasting success.
New generations of fans consume football differently through digital platforms and online communities.
Because in football, financial power alone does not guarantee victory.
A successful club needs the right people, the right decisions, and the right culture.
That is the real economics behind owning a football club, creating value that lasts beyond one season.
From a financial perspective, football clubs are some of the most unique investments in the world. Unlike ordinary companies, clubs combine financial value with emotional connection. This emotional connection is something most traditional businesses can never replicate.
That loyalty creates powerful advantages in sponsorships, merchandise, and global brand growth.
For investors, this combination makes football clubs powerful assets with opportunities unlike almost any other industry.
Player salaries, transfer fees, and operating costs can quickly become enormous financial challenges.
A club can generate huge revenue and still lose money if expenses are not controlled. Poor decisions can create debt that affects the club for many years. This is why successful owners must combine ambition with financial discipline. The smartest owners do not only spend money, they build systems that create consistent value. Strong clubs create multiple income sources instead of depending on only one stream of money.
Diversifying income helps clubs survive difficult seasons and unexpected challenges. This approach allows clubs to invest in players, facilities, and future growth without risking collapse.
In the end, the best football clubs are built by combining financial strength with smart decision-making. The biggest football clubs in the world are valuable because they have built powerful global brands.
A strong brand attracts sponsors, increases merchandise sales, and creates worldwide recognition.
This brand value can continue growing even beyond the results of a single season. For investors, this long-term brand power is one of the most attractive parts of football ownership. A football club is not only built on the pitch, it is built in the minds of millions of people around the world. Media rights have become one of the biggest sources of income for modern football clubs.
Television companies pay huge amounts because live football attracts millions of viewers.
The more popular a league becomes, the more valuable its broadcasting rights can become. For many clubs, media income provides the financial foundation needed to compete at the highest level.
However, relying too much on one income source can create financial risks.
Successful clubs create balance by combining media income with other powerful revenue sources.
This financial balance helps clubs remain competitive even during difficult periods.
The strongest clubs also invest heavily in developing future talent. A successful academy can save money on transfers and even create new income opportunities. This long-term approach is how many clubs build sustainable success instead of chasing short-term results. Beyond players and revenue, stadiums themselves are valuable business assets.
Modern stadiums generate income far beyond match days.
Premium seating and hospitality areas have become major sources of additional club income. This stadium is now a worldwide attraction, drawing tourists from across the globe to our tours, museum, and digital experiences. A well-designed stadium can become one of the strongest financial foundations of a football club. In the end, owning a football club is a journey that combines business, sport, and human emotion.
The biggest owners are not only buying a team, they are investing in a global identity.
The economics of football proves that success requires more than money. It requires vision. Because the true value of a football club is measured not only by money, but by the legacy it leaves behind. Thanks for watching. If you enjoyed this financial journey, subscribe for more deep business documentaries and economic stories.